we always like to start off the show, with a summary of what's been happening in the stock market. And it's been quite the interesting ride here altogether. Really, if you look back to the middle of November to now, the market's pretty much in the same spot. We've been trading in a range. There is some inputs that are definitely happening that seem to be, driving things one way or another. So if you kind of look day by day, the key things that are moving the market one way or another are what's happening with inflation. And there's a bunch of pieces of that, the jobs report, what the Federal Reserve is saying, the CPI reports and the PCE inflation reports that have been coming out over time here. And of course, the other thing that seems to be moving the market one way or another has to do with these tariffs. And so, looking at this week, for example, on Monday, the market was down 2% at the beginning, essentially, because of the threat of tariffs that were announced on Friday of last week that were supposed to come into play over the weekend. Turned out they were going to come on Tuesday, which is what I think the 4th, right? And so, but on Monday, they sort of resolved, at least for 30 days, the tariff situation with Mexico while the market was open. And the market came back up. We went from -2% to -0.75%. After hours, they actually resolved the situation with Canada. Also, similar scenario, just agreements on what's going to happen with the border and those types of things. But the 10% tariffs that were announced against China are still there. They've been talking. We'll see what happens there. And the problem with these tariffs is it's not as easy as it sounds, just in the sense of it's often not a blanket tariff. It's on certain goods, and so certain isn't. And I know the tariffs that were part of the 2018, tariff raising situation were exactly that, kind of parsed up against, China for certain things. And I think what they're seeing, though, is there's a lot of ways around those, and so they're trying to kind of fill in some of those loopholes and what have you, too. So today's a good example of kind of what's going on. It kind of has all the pieces. So first of all, we had the jobs report that came out today for last month. So for January, there was 143,000 jobs created, which I think is a good number. But the expectation was that it would be a little bit higher.
Yeah.
Okay. But the market went up. It was up about 0.25% right after the report came out, because that's kind of exactly what you want. You don't want hot job growth per se, because we're in an inflationary environment. But you don't want it to be really low, because then we start to worry about the recession that might be coming. And so being a little bit below expectation is good. And that was also combined with revisions for December and November upward.
Yeah.
Most of you might remember they did a big revision halfway through last year, and I think they dropped it by 800,000 jobs for the first half of the year or what have you. So that's a big overstatement, but that's kind of how it works. So in this case, they're actually revising them up. And the December jobs report was actually quite good already. It was 256,000 jobs. Matter of fact, that dropped the market, I believe, about 1.5% that day when it came out. And but they've revised that up to 306,000 jobs, and they revised November up also. So I think the job market's doing really well. The wage growth is outpacing inflation, so that makes for good consumers.
Yeah, happy consumers.
Yeah,
good for a market.
And then so we're up in the morning, and then all of a sudden we're coming down, and there were two main catalysts for that. One is the announcement that we would have retaliatory tariffs, maybe immediately. Who knows what happens? We'll see how that plays out. But one of the examples was given that if a European car coming into the U.S. is being a tariff of 2.5% right now, a U.S. car going into Europe is a tariff of 10%. And so kind of equaling those out. And we also had consumer report coming out, consumer sentiment survey, which was not as good as the previous ones.
Yeah.
So you have a situation where the combination of those two, as of we're speaking now, we were down about 1% for the day. And we were pretty close to getting back to a new all-time high again. And so there's some concern there, because, you keep coming up and then failing. You're starting to create double tops. You're starting to create different situations. We'll see how that plays out. But I don't think there's any significant threat to the market as we speak here. There is a lot of concerns about what might happen. And this is one of my key themes that I talk about all the time, is that, people are asking me, well, should we be doing something to our portfolio because of the new administration or what have you? Well, The problem is, what's the new administration going to do, and what is the impact for the stock market going to be? Let's say that they do tariffs. Okay, so theoretically, that's potentially inflationary. It's also potentially, an issue for the stock market because that's the key thing the market's looking at right
Yeah.
now is inflation. So, but at the same time, you don't really know if it's going to have a negative impact for sure. I mean, if you look at the first downturn that's right over the talk with money thing here on this chart, that was 2018 when they first did tariffs. It dropped 19.6%. And then they stopped doing tariffs. It came back fairly quickly as
Yeah.
far as that goes. So, we have a pattern. But what normally happens in those patterns is, people realize, oh, it's more of a buying opportunity because it's not a calamitous situation, or at least it wasn't in 2018. We still have those tariffs for the most part.
Yeah, and I think it's the stopping of new tariffs is the big deal. It's as long as there's no additional tariffs going out, I think the market is happy. Like once the tariffs are established and kind of set in place,
Right.
I think the market will adjust and then we'll kind of move on.
Yeah, that's exactly right. And so because of that thought process, you might end up with a situation where the market just doesn't pay as much attention as people think it might to that situation. So, yeah, we dropped 19.6%, but maybe the next time this happens, we only drop 5 or 6%. Who knows? And so that we've seen that in the debt ceiling, right? First time they did debt ceiling 2011, market dropped 17%. The last time we had a debt ceiling argument, market was down 3%. So it's sort of the situation where the market gets more used to it, and it is new things, like you say, so new tariffs. And so today the market's down. I would say, in my opinion, looking at what happened minute by minute to the market, it had more to do with the talk about tariffs than anything else in terms of the downturn, as far as that goes. But all the way through here, we've been getting earnings reports. We're in the middle of the first quarter earnings season, and these weeks have been the big companies, the Amazons, the Microsofts, and what have you that are out there, and Apple. Uh, I'd say overall the earnings reports have been good. The one thing we've seen that's been interesting is the forward guidance
Hmm.
has been soft. And a lot of the companies have kind of had a little sell-offs because of that forward guidance. I guess the other key area is for a few companies like Microsoft and Google, a little bit lower growth in the cloud computing area than what was expected. So they got knocked on that also. So we'll see what happens. Altogether, when you look at what's been going on here, we're going sideways, right? So we've been going sideways since middle of November. We did hit a new all-time high a couple weeks ago. Almost got there yesterday, within 0.5%. We're backing off from that now, but um, I don't think recession is something that we're going to be worried about too greatly here at this point in time. I think the key issue is inflation and these tariffs, and they actually relate to each other theoretically, right?
Hmm.
So if you do a lot of tariffs, you could end up with a higher level of inflation. That's not a guarantee. It depends on who absorbs the costs of those tariffs. But theoretically, consumers could absorb some or all of those costs, which would be an inflationary event. And then if you have higher inflation, the Federal Reserve not only stops lowering rates, they've already done that
Hmm.
for all intents and
Yeah.
purposes. The next expected lowering is in June. But maybe they don't even do it in June because things are kind of heating up. So if you saw, core PCE inflation growing, right, from 2.8% where it's been at more or less since last May, all of a sudden it's at 3 or 3.5. The Fed's probably going to have to raise rates in that
Yeah.
environment. So I think that's why the market is kind of going sideways, just because of the uncertainty for what's happening. And maybe even why some of these forward guidance situations are a little bit, weaker, because we don't know. We're trying to figure out what happens with the deportations of illegal immigrants to those industries. We've heard stories now that here in California that some of the orange fields aren't getting harvested and such like that. So what's that mean? How does that work? How do we work around that? There's always those unexpected situations that get resolved quickly, but not all of them. So it's been altogether, it was down on Monday. It was up every other day for the week, and then down today. Might end up being a down week altogether in the end, as far as that goes. But again, nothing to be concerned about. Let's let's back up a second and try not to guess what's going to happen,
Hmm.
and try not to change our portfolios based on that guess. It is the best way to invest, is to guess only if you're right a lot. you will make the most money. If you are good at guessing or making projections and you're accurate a lot, like more than half, right?
Hmm.
Uh, you can do quite well. The problem is that there's virtually nobody who's been very good at that on a consistent basis. Uh, and so what I say is, hey, let's just sit back and watch and see what's going to happen. Let the market develop. We look at the chart here, we see great momentum.
Hmm.
There's a great momentum there. That thing is going well. That can change, but the momentum is something to pay attention to. And then let's just react to how things happen. We don't need to, you know, jump into different things because we think tariffs are going to come and we think we know what's going to happen with them. I would challenge anybody to be able to tell me exactly how the tariff situation is going to play out because I think it's a situation of flux. I also believe that this administration ultimately doesn't want to bring down the stock market. So that's kind of why I think we're seeing the tariffs being used as a threat and not as an actual tariff as a whole.
Hmm.
So, we'll see how that plays out. But anyway, that's what's happening this week. I think it's a very, very interesting time to be paying attention to what's happening to the stock market. We're going to learn a lot about what might happen here over the next 4 years. Coming up here, they're going to be working on tax cuts, potential corporate tax cuts. No matter what you think about the cuts or corporation tax cuts, some people think that corporations should pay more, and all those. I get all that, but the market is pretty straightforward. Higher earnings equals a higher stock market for all intents and purposes. And if you cut taxes, say from 21% corporate tax to a 15% corporate tax, yeah, you're going to have an upwards moving stock market
Hmm.
because that increases earnings pretty much immediately. So, we'll see how this all plays out as far as that goes. So far, I think the market is doing fine. It's just kind of waiting around to see what's going to happen, just like the rest of us for the
Yeah,
most part.
and we have some big dates coming up in March with the actual, the budget, federal budget is coming up.
The federal budget, well, the debt ceiling's in March too, so
Yeah.
extending that debt ceiling. Trump has talked about wanting to get rid of that debt ceiling, which I could not agree more
Yeah.
to get rid of that. I hate the debt
But
ceiling.
I don't know if Congress wants to give it that power.
No, I don't think they do, actually. That's why they didn't do it when they were first asked to do it. But maybe in this combination bill that they're going to do, it'll be something that they include in there. Uh, it's going to be a tough road to kind of get some big bill through because of the minority, the very small lead that they have in the House, for example.
Yeah.
And it doesn't take many people that don't like what's in the bill to kind of kill the bill. So we'll see how that plays out. But anyway, that's coming up. We do have some interesting times coming up. I think the first half of this year is going to be all about those types of things. What's happening in Congress, what's in that bill, how does that affect the stock market? Can it get through? Does it make it? Those type of things. So that we'll be talking about that quite a bit. So, all right. So thank you for joining us for the summary for what we saw happening with the market and